Be Wealthy and Smart, episode 1422.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about Nasdaq hitting a record high. However, most stocks in the Nasdaq index are actually lower. How could that be? That's what we're going to talk about today. But first, during a busy corporate earnings season, Nasdaq hit a new record high and crossed the 18,700 level. The S&P was up 0.3% and the Dow Jones was down 0.2%. We saw some big increases in Meta and Alphabet, up 1% on Tuesday ahead of their earnings releases. This is the busiest week of earnings seasons with more than 150 S&P 500 companies scheduled to report their earnings before Friday's close. This while Treasury yields were inching up to their highest levels since July. While the Nasdaq index was up 8 of the last 9 sessions, not all the stocks in the Nasdaq are in positive territory. With the Nasdaq at a record and the S&P 500 near its record close set just 11 days ago, most stocks traded in the U.S. are actually lower. Nearly 68% of all stocks traded on the New York Stock Exchange are down in price. That's 1,904 stocks out of 2,820 stocks. Fewer than 28% of stocks, or 780, have higher prices, with the balance unchanged. On Nasdaq, more than 51% of all stocks are down, with fewer than 38% rising in price this year. And that shows us that the Magnificent Seven, again, have overly heavy weight in the index and are more important to price performance, making up about a quarter of the Nasdaq's performance numbers. When we get earnings results from Amazon, Alphabet, and Apple this week, that could offer more insight into the state of the consumer and the advertising environment. Technical strategist Robert Schumer from RBC Capital Markets said, although the market volatility posed by the upcoming U.S. presidential election is at the forefront of investors' minds, RBC Capital Markets warns that other indicators in the market point toward short-term sell-offs. The biggest risk we see to equity markets is the recent trend higher in interest rates and the U.S. dollar. Both tend to be overbought in the short term, with potential to peak shortly. Yes, and as I said, the 10-year Treasury yield hit its highest level since July of 2024 on Tuesday, while the U.S. dollar has also trended higher. All of this with the precious metals market going crazy in the background, with gold soaring more than 4% over the past month and over the past 3 months up 17%. So we still have a handful of tech companies who have invested in artificial intelligence and who are raking in more than their fair share of the profits, driving the Nasdaq higher. It's still a small group of companies and not the entire Nasdaq that's doing well. So even though we're seeing the new record in the Nasdaq, it's a little bit of a distorted figure. But for now, we'll celebrate the Nasdaq's new high. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.